So hello everyone, welcome to this lecture of lease financing decisions, which is again relevant only for CMA final SFM, not relevant for CA final. It's only relevant for CMA final SFM. In this chapter we will discuss exhaustively about lease financing. I hope you would have gone across these terms called lessor, lessee, etc, etc. In this chapter we will just try to identify how should a lessee make a decision. Should he buy the asset or should he go for leasing? For a lessee, he has two options. Either he can buy the asset itself or he can go for leasing. Leasing is nothing but taking it on rent. Guys, the chapter is very simple. Every normal person has two options. Either buy a house or go for a rent, right? Rented house or a own house. So the same concept will be applied in this entire chapter. Either rented house or own house. Either rented machinery or own machinery. From lessee's point of view. Who is lessee? He is similar to the tenant. Lessor is the owner of that asset. Lessor's point of view we will discuss later. This chapter predominantly focuses on lessee's point of view. And majorly the questions are also from lessee point of view most of the times. But yes, even lessor's point of view they have asked you. And whenever they are asking a question from this particular chapter, lease financing decisions, it's generally for 8 to 10 marks. That is the kind of weightage. I'm telling you again and again. These are easiest chapters to score. 25% of the marks are going to be from this first part of your syllabus. Hence, it's going to be very, very easy. I will try to make it very, very easy. One chart for this particular chapter also. So in one chart, I have tried to cover up all the concepts, right? It's a very beautiful diagram I have drawn here. Let's now jump into the introduction of this chapter, right? Any issues with my voice, with the video, etc., let me know in the group immediately so that I can rectify that. Done? Okay. Hope everything is settled now. Let's start with the chapter. Introduction. A lease is an agreement whereby the lessor, that is owner of the asset is the lessor, conveys to the lessee. Who is lessee? Yeah? Lessee is the person who takes assets on rent or lease. So in simple term, to make you understand easily, lessee is nothing but the tenant and lessor is the owner, right? In return for a payment of series of payment, so in return you will be paying some series of payment, right? So if you are staying in a house for rent, what are you paying every month? You are paying the rent. Same way if you are taking something on lease, you will be paying them back the lease rentals, right? For your knowledge, it is also exhaustively covered in an accounting standard AS 19, right? AS 19 is also talking about lease, which you would have studied across in your accounts. But nonetheless, assuming you don't know anything about AS 19, I will be starting from the scratch only, don't worry. There is nothing correlation between these two, so don't confuse yourself. Now, two perspectives of this chapter. So in this entire chapter, we can try to understand having two perspectives. The first perspective from the lessor's point of view, the second perspective from the lessee's point of view. Predominantly, this chapter focuses on lessee's point of view. If you have understood lessee's point of view, lessor's point of view is also very, very simple. Okay. Leasing decision for lessor is similar to the decisions in capital budgeting chapter. So for a debtor, the workings will be same as how you try to do in capital budgeting. Which chapter is capital budgeting? Your investment decision. I am talking about which chapter? Investment decision is your capital budgeting here. The decision to procure the asset is made already. Okay. Lessor shall check if his NPV is positive or negative, and obviously only if NPV is positive, lessor will be willing to give his asset for rent. Here, lessor decision making is, should he give this asset on lease financing, right? Should he give it 10,000 rent or 12,000 rent or 15,000 rent, bring them to present value and try to find out if your NPV is positive or not. Obviously, yeah, before letting your house property for lease, for rent, as an owner, I will obviously try to find out how much is my return. I would have invested huge on this property, right? And I'm expecting some amount of return over a period of time. So lessor's point of view, the decision is same as what we used to do in capital budgeting. So it's very simple. We have already learned this. The only thing is I need to bring that viewpoint in your mind. The viewpoint, how to go about the viewpoint of lessor. Right? And for lessee, the dilemma is to whether procure the asset through lease or hire purchase. See, lessee has two options. Either he can go for rent, that is he can pay rent every month, or he can borrow from the bank, buy the asset. Lessee can either go for rental payments, that is lease rentals, or he can borrow from the bank, borrow amount from the bank and buy the asset, right? So these are the two options. And most of the questions we will try to evaluate, should a lessee go for lease financing or should a lessee go for hire purchase? A hire purchase, I hope you would have learned in your intermediate also. You would be knowing the meaning of this. If you don't know, don't worry, that has also been given here. Taking a bank loan and buying the asset. Yeah, so taking the bank loan and buying the asset is your hire purchase. So that was the basic of this chapter. Now let's try to discuss part 1 from the viewpoint of lessee. So keep your eyes, nose, ears, everything open. Be careful because it is little bit tricky initially. Once you have understood the initial stage of this chapter, it becomes very simple, right? So be careful or be attentive to the class, at least for the first half an hour. Don't get distracted. Important to understand the entire chapter. 8 to 10 mark chapter, I'm telling you. They are testing every second examination for 8 to 10 marks easily. And once you have understood the concepts, it's not like a chapter like forex or derivatives where you have to break your brains and try to solve it. It's very simple. You just need to understand the viewpoint, act accordingly. 8 to 10 marks, simple. The solutions are little bit large, but still it is easy to crack the question in examination, right? Present value of cash outflow method for lessee, right? So present value of cash outflow method for lessee. This is a lease evaluation method from the viewpoint of the lessee, the user of the asset. Hey, who is lessee? Yeah? Lessee is nothing but the user of the asset, who has two options. Option number 1 is leasing the asset. Now let's understand what are we supposed to do under option number 1, leasing the asset. The lessee who is leasing the asset, the only outflow from lessee's point of view. See, if you want to take a house for rent, what are your outflows? Sir, if I am taking for rent, the only outflow is rent. Apart from rent, what is the other outflow? Yeah, nothing else, right? So lessee's point of view is only the rent payables normally. That is the only outflow. His present value of cash outflow are as follows. So now what are we going to do, right? There are two options. Paying rent, borrowing from bank and buying the asset. If you are paying rent, what is the outflow? Present value of outflow. If you are borrowing and buying the asset, what is the present value of cash outflow? So this present value of cash outflow, this present value of cash outflow, whichever is having lesser present value of cash outflow, will go for that option, obviously, right? See, whenever we are a lessee, it is obvious that there will be cash outflow. There can never be cash inflow. Yeah, I want to buy the asset. Yeah, I'm not doing a business here. It's not a business here. It's only buying the asset either by borrowing from bank or on rent, right? So we have to compute what? Present value of cash outflows, lease rent, net of tax. So obviously we will be calculating after deducting taxes. What is step 1? Compute future value of the lease rentals payable net of tax. So future value of lease rental payable, that is lease rental payable every year. Hey, this is an outflow, right? But it is in future value. We need to bring this to present value. Less tax savings. Now this is unique, right? Sir, why are we reducing tax savings? For that, let me take you to the P&L presentation. Guys, in P&L, where do we post the rent payables or rent paid? Rent paid is an expense. Do you agree with me? Sir, if it is an expense, it will be debited to P&L account. If it is debited to P&L account, can I tell any expense debited to P&L account? Let it be to rent, etc., etc. Obviously, there will be tax savings on this, right? This concept I've already explained you, yeah, and it's one of the most important concepts of this entire subject. Okay, so there will be tax savings on rent because this, for example, let us say 1 lakh we have debited in P&L. There is sales of, let's say, 5 lakhs, just for an understanding, yeah. Okay, so 5 lakhs, if there was no rent, in that case, sir, I would have paid tax on my entire income of 5 lakhs. Assuming there is no other expense here, yeah, okay, just for simplicity's sake. So I would have paid tax at 30%. 30% also is an assumption. So 5 lakh into 30%, 1,50,000 I would have paid. But since there is rent debited to P&L, what is happening? My profit is not 5 lakh. My profit comes down to 4 lakh. Right? Because 5 lakh minus 1 lakh, 4 lakh. 4 lakh into 30% means only 1,20,000 of tax I will be required to pay instead of 1,50,000. So how much is the tax saved? Sir, tax saved is 30,000, sir. Okay. Can I directly get this 30,000 amount? Yes, you can. 1 lakh into tax percentage is how much? Sir, tax percentage is 30%. So 1 lakh into 30% is nothing but the same 30,000 which you are saving as tax here. I hope you were able to understand this particular. It's a very simple, again and again, I did it n number of times. It's not the first time I'm doing this. Okay. So obviously, if you are going for lease rental, you will also have tax savings. Reduce that because tax savings is an inflow. Lease is an outflow. Outflow minus inflow we are doing, right? That was step 1. Step 2. Bring such future value of lease rentals payable to the present value. Future value of lease rental payable, bring it to the present value. Why are we bringing it to the present value? So that we can compare these two, yeah. What are these two? One is borrowing from bank and buying the asset. Other one is leasing of the asset, that is taking it on rent. Okay. So bring the future value to present value. You all are masters now, right? To bring the future value to present value, right? So into PVIF, if it is not an annuity, and if it is an annuity, PVAF. I hope now you don't have any doubts regarding PVIF, PVAF, R percentage, comma, N years, etc., etc. Everything is all clear, right? Still, if you have any doubts, do let me know, yeah. It's not like I have assumed that you all know it, but if you are still having any doubts, you can always let me know. I will try to solve your doubts. Not an issue at all. Note. What is the note given here? Questions might specify 2 types of percentage. Now in this chapter, there is one huge amount of tricks used by ICI. They will give you multiple percentage. One will be interest percentage, one will be KO, one will be KE. They will give 2-3 percentage. Now you will get confused. By which percentage should you discount? What is your discounting factor? To analyze that itself, it will require a little bit of brain. Yeah, because till now in your entire questions you will have only one percentage, either PVF or discounting factor or KD or KO. So you will obviously know that that is your discounting factor. But here you will have 2 percentages. Hence we need to be careful which rate has to be taken for discounting future value to present value. Yeah, we need to be really careful here. Okay, sir, understood. So that was a very simple method. If you are going for leasing, what is the outflow? Sir, lease rental is outflow. What is the inflow? Tax savings on lease rental is an inflow. But this is in the future value. Bring it to the present value. You will get what? Present value of cash outflow for leasing option. There are 2 options. Leasing option alone we have discussed right now. Hire purchase we have not yet discussed. Okay. Okay. So those, sir, two types of percentage you told, no, sir. What are those 2 types? One is interest rate. The other one is discount rate. Percentage of interest on the loan taken for hire purchase. Interest rate is useful not for bringing future value to present value. Interest rate is useful because you are going to borrow from bank, right? Bank will charge you interest rate, so you need to pay interest rate for bank purpose, not for bringing future value to present value, which shall be chargeable by bank. This rate is given to compute interest amount for hire purchase option. Hence, do not use this for discounting of future value to present value. Done. So, interest rate is not used for bringing future value to present value. Discount rate is used. Sir, what if in the question there is only 1% and they have given only interest percentage, no discount rate? If only interest percentage is given, what do we consider? Sir, we consider KD. Sir, what is KD? KD equals interest into 1 minus tax. I hope you remember this. Even in capital budgeting chapter, that is your investment decision, we had dealt with this. That is, it was only interest percentage given. In that case, I will take post-tax interest, that is KD, cost of debt. It is cost of debt, cost of equity, cost of preference, etc., etc. Where there in your CMA intermediate. There is one more chapter, corporate valuation. Again, we will learn that. Don't worry. But KD is what we use if we want to bring the future value to present value and not interest percentage. But how do we get KD? Interest into 1 minus tax. This we use only if they have not given any discounting rate, they have only given interest rate in the question. Sir, what if they have given both the rates? In that case, interest rate is used only for hire purchase method, not for bringing to the present value. For present value, we use discount rate. Sir, what is discount rate? Present value factor or discounting factor, KO or KD. KD means what? Interest into 1 minus tax. Or percentage of required return or any other percentage other than interest on bank loan. All these will be considered as discount rate. Are you clear? It's very simple, yeah. I hope I was clear. Just hold on a second. Thank you. I hope my voice is clear, yeah. If there is any issue, you can let me know, or it's all good. So this rate shall be used to for discounting future value to present value. Done. So there are two rates, you have to be careful. Interest rate should not be used for discounting. For discounting, you can use required rate, cost of capital, or KD, or KE, anything, present value factor, discounting factor. All these you can be used. We can use for bringing future value to present value, and not the interest rate of bank. Done. So be very clear here. Second option. Second option is purchase or buying of an asset by taking loan. Buying of an asset by taking loan. That is hire purchase, yeah. As simple as that. So computation of present value of cash outflow for buying. Step 1, identify discount rate, interest rate, tax rate. So first step is to identify which one is your discount rate, which one is your interest rate, which one is your tax rate. A tax rate is also given in percentage, right? So percentage of tax rate, percentage of interest rate, percentage of discount rate, 3 percentages are there in the question. You have to identify that first. Done. Second step, identify the cost or value of the asset today. Cost or value of the asset today. So what is the cost? What is the outflow? What is the value of the asset you need to pay? Hey, you need to buy the asset, right? In hire purchase, what are we doing? We are taking loan and buying that asset. So for buying that asset, what is the outflow in today's value? Right? So compute the amount of bank loan to be taken. Generally, it is given in the question. So how much is the cost of the asset will be given in the question. Cost of the asset is nothing but present value of cash outflow only, right? Today we are going to pay for buying the asset. What is the outflow? Cost of the asset. Cost of asset equals annual installment on bank loan. Annual installment on bank loan divided by PVAF. I hope you remember this formula also. We had undergone or considered this formula when we were computing this equivalent annual cost. But nonetheless, I will make you understand. Don't worry again. It will be there in the question. So when solving the question, we will be able to understand this again. Don't worry. Now, third step. So first step, identify discount, interest, tax percentage. Second step, what is the cost of the asset? Cost of the asset will be the cash outflow. Third step, identify amount of bank installment. Bank installment you need to identify because see, today we are going to get bank loan, right? And we are going to pay for the cost of the asset. Are we paying anything out of our pocket? No. We are not paying anything out of our pocket. We just took it from the bank and paid for buying the asset. Our outflow was nil today, right? Our outflow is when we pay back installment to the bank. What is installment? Principal plus interest. So principal plus interest is your installment. This is our outflow. It's not the cost of the asset. Installment will be our outflow, and installment will happen every year on year, right? So we need to bring them to the present value. Cost of the asset into PVAF, interest percentage, n years, equals annual installment on bank loan. Sir, this formula and this formula both are same only, okay? Both are same. The only thing is I have brought this to opposite side. Cost of asset into PVAF will give you annual installment on bank loan. We discount using interest percentage and not discount factor, as we need to find out annual installment. Okay, here PVAF of interest percentage and not discounting factor percentage. We will use interest percentage. Why? Because this is for computing annual installment. Who will compute annual installment? We or the bank? Bank will compute installment, right? Bank will compute installment and tell us that this is your installment. So installment we are not computing, and when bank computes, it will obviously require which percentage? It will require interest percentage. So discount using interest percentage here. Discount using interest percentage, not the discounting factor. So this is what I told you, you have to be very careful. Sorry. With the help of this working note, here opening outstanding, I think there is some okay, all good only, not an issue. So here opening outstanding will be the cost of asset. A cost of asset is nothing but the loan taken from the bank, right? That will be outstanding, right? Installment payment, we will pay installment, we will calculate interest, we will bifurcate this installment into interest and principal. Are you able to understand? We will bifurcate this installment into interest and principal. Opening outstanding minus principal will give you closing outstanding. Opening outstanding minus principal, which you have repaid, will give you closing outstanding. This you will understand more better only when we are discussing a question. So you just need to wait a little bit. We will be discussing a question soon. In step 3, we have calculated interest amount. Such interest amount is debited to P&L. Interest amount is debited to P&L. A principal amount is debited where? Okay, can you all tell me? Can anyone tell me? Where is principal amount debited? Interest amount is debited to P&L account. Where is principal amount debited? To which account? To which ledger do we debit principal amount? If you are not knowing, do let me know that you don't know, so that I can proceed, okay? Where will principal amount be debited? And interest amount which is debited to P&L will obviously have tax savings, right? Step 5. Step 5. Computation of depreciation. Okay, so till now what we have done here? First thing, we borrowed from bank, we bought the asset. Our outflow was nil. Our only outflow is installment every year, right? Installment every year. Loan account, absolutely right. Absolutely right. It is going to be on the loan account. Where will loan account be? It will be on the liability side. So liability side, any expense will not have any tax savings, okay? And superb, I am proud of you. Now, so only on interest amount will have tax savings, not on the principal amount. First thing. Second thing is, now we have bought the asset, we are the owners. Once we have bought the asset, can I tell it will be shown under the asset side? For example, one asset we have bought for 10 lakhs. How did we buy for 10 lakhs? By borrowing from bank, right? So what will be the entry? Sir, entry will be asset account debit to loan account, loan liability account, okay? Loan is a liability, right? So both it will be 10 lakhs, 10 lakhs. Now, asset is showing 10 lakhs. Obviously, there will be depreciation also, right? Hey, we are going to buy machinery for our business. We are not buying any land here. If it is land, then we don't have depreciation. But if we are buying machinery, we are buying any other fixed asset for our factory, we are buying any building also, all of that will have depreciation. This depreciation, that is from asset, it will go to P&L every year. P&L every year we will debit some depreciation, right? On this depreciation also we will have tax saving. Depreciation is not an outflow. We don't pay anything to depreciation, but because this depreciation is debited to P&L, we have what? We have tax savings on this depreciation. Done. So that is very important. That is what I have given you here, computation of depreciation. Questions shall specify if the depreciation is SLM or WDV. Yeah, obviously, yeah, depreciation also depends based on your SLM method or WDV method, based on which compute depreciation for all the years. Depreciation for SLM, cost of asset minus salvage value divided by life of asset. You are all masters of SLM method. Yeah, I did not teach you all this, right? I hope you are masters. Depreciation for WDV, cost of asset into WDV depreciation percentage given. Very simple, yeah. Depreciation which is debited to P&L shall have tax savings on it. So till now, outflow, total installment is the outflow. It's not only principal or interest, both are our outflow only. Principal plus interest, both are our outflow. We are going to repay installment every year to the bank. That is an outflow, but there are two inflows till now. Sir, what are those inflows? Tax savings on interest, tax savings on depreciation. And these two are inflows for us. So we'll reduce this from the outflow of installment. Okay. Step 6, computation of tax expense on capital gain or tax savings on capital loss. So at the end of the useful life of the asset, there might be either profit on sale of asset, loss on sale of asset. If there is loss on sale of asset, tax savings. If there is profit on sale of asset, tax expense. This we have already dealt with many times. If salvage value is greater than book value, capital gain. So tax expense, okay, on capital gain, and if salvage value lesser than book value, then tax savings. Now do this working only if it is specifying in the question that compute capital gain. If the question doesn't specify, now take a note. Assumed that capital gains is ignored due to lack of information, so that you can save 5 to 10 minutes of time, because capital gain is not that easy to crack. It's easy, but still you will save at least 2 to 5 minutes just by writing a note. If they have not given anything in the question, sir, in the question sir, they gave us compute capital gain, tax saving or tax loss, then in that case you have to consider. And if it is WDV method and they have given you scrap value, if it is WDV method and they have given you scrap value, then obviously we will have either capital loss or capital gain, then also you have to do. So WDV method, be careful, capital loss or gain will be there. Computation of total savings on interest and depreciation. Total savings on interest and depreciation, you have to compute. Calculate cash outflow after tax. So what will be the cash outflow? Yeah, sir, installment is a cash outflow plus salvage value only in last year. Salvage value is a cash inflow, right? I think I should have deducted that. Yeah, I made a mistake here. So salvage value is not a cash outflow, it's an inflow. I made a mistake over there. Minus tax savings per annum inflows plus tax expense on capital gains only the last year. And this tax savings per annum is what we have computed in step 7. Totally how many steps are there? One more step, calculate discounted cash outflow after tax. So now after computing this step 8, cash outflows after tax, discount them not using interest rate, discount them using present value factor or discounting factor. Interest rate is used only here. I'll show you where is it used. Sir, interest rate is used only for this working. Only for this working we use what? Interest rate. To compute annual installment, we use interest rate. Nowhere else do we use interest rate, okay? Please be careful there also. These were the 9 steps. Conclusion, option 1 versus option 2, whichever is having lower present value of cash outflows will be chosen. Here we are not bothered about NPV, yeah? Both of the options will have outflow only. So whichever is having lesser outflow, we will go for that option. That this was the major part of this conceptual understanding. Once you have understood this, now let's go for the question, because questions there might be probably 4 to 5 questions also out of them. Okay. Net advantage of leasing, I'll come back later. IRR technique, I'll come back later. The only thing is, I think I had to see Okay, we can discuss the questions here. So let me take you through. In fact, instead of question number 1, I want to start with question number 2. Totally, I have taken 9 questions in this chapter. Try to discuss all the questions. Let's see. I am not taking question 1 because that is little bit more complicated than question 2. Let's solve question 2 first, then we'll go to question 1. Now XYZ Limited requires an equipment costing how much? 10 lakhs. So equipment is costing how much? Sir, 10 lakh rupees. So how much of bank loan you have to take? Sir, 10 lakh rupees. Okay. Same will be utilized for a period of 5 years. It has 2 financing options in this regard. 2 financing options in this regard. Arrangement of a loan of rupees 10 lakhs. Interest rate is 13%. Very, very important. Interest rate they have given as 13%. Loan of how much you will have to take? 10 lakhs. The loan being repayable in 5 equal years and installments. So 5 equal installments, 5 years you have to repay them. Equipment can be sold at the end of 5th year for 1 lakh. So this is the salvage value inflow. This is okay, inflow. I think I will just make a note here because I made a mistake in my nano book regarding this. Let me highlight it, yeah, so that later I can come back and revisit. Okay, very important for me to rectify smallest of the mistakes also, so that I can also provide you final version of this particular. Okay, done. If I can rectify this, that's better. Okay, thank you. Leasing the equipment for a period of 5 years at an yearly rental of 3,30,000. So if you are leasing means per annum how much you are going to pay? 3,30,000. For 5 years, if you want to pay for 5 years, how much will you be paying? 3,30,000 into 5. That is almost 16,50,000 you will pay for a period of 5 years. Cost is only 10 lakhs. If you try to tackle like this, you will go wrong, because 16,50,000 is future value, 10 lakhs is current value. You cannot correlate future value with current value, right? Bring that future value to current value first, then only you can correlate. Rate of depreciation is 15% on WDV. It's WDV method. You have to be careful regarding short term capital gains or capital loss. You have to be very careful here. Income tax 35. Discount rate is 12%. Discount rate is how much? 12%. So be careful here also. Otherwise, which of the financing options should XYZ Limited exercise and why? Let me open the solution sheet. Solution number 1 is financing. Sorry, 2, not 1. Solution number 2, discount rate is 12%, interest rate is 13%, tax rate is 35%, depreciation rate is 15%. So 4 percentages are there in this question. You have to be very careful. The only crux is to sort out where will you discount with 12, where will you discount with 13. That is only crux. Rest of everything is simple. First, let me discuss with you the working notes. Okay, working notes. Calculation of annual payment. You need to calculate how much is the annual installment you need to pay to the bank. Now, for a moment, think from the bank's point of view. Bank is going to give you 10 lakh. I am the bank, you are the lessee. I am going to give you how much? 10 lakh rupees loan. You will repay me in how many years? 5 years. In 5 installments. If you are repaying me in 5 years, I am expecting how much of interest rate? Sir, bank is expecting 13%. Now using 13% and for 10 lakh, I need to calculate what? Installment amount. So let's understand how are we going to calculate installment amount. That is 10 lakhs equals X into PVAF of 13% comma 5 years. A installment is equal installment, right? They have given in the question itself equal installment. So into 3.51723, installment is coming to roughly around 2,84,315 rupees. 2,84,315 is the installment amount. Let's try to understand this now. Opening outstanding as on the today will be 10 lakhs. Year 1, how much of installment you are going to pay? Sir, every year we are paying the same installment only because it's equal installment, right? 2,84,000, 2,84,000, 2,84,000, 2,84,000, 2,84,000. 10 lakhs into 13%. How much is that? So 10 lakhs into 13% is 1 lakh 30. So can I tell 1 lakh 30 will be the interest for first year? You have taken loan of 10 lakhs, 13% you have to pay as interest. 1 lakh 30 you have to pay as interest. Remaining amount will be what? The remaining amount will be principal. Remaining amount will be principal. So closing outstanding will be 10 lakhs minus this principal amount of 1 lakh 54. That will be the closing outstanding. This and all is very basic, yeah, but still, nonetheless, I am trying to explain you in detail so that you don't get confused here. I know it's all basic, you already know, right? Because SFM is a subject where you just need to understand the concept. Working of these problems are very simple. Conceptual understanding should be there to work out problems. If you're not having conceptual understanding, straight away going to work the problems, you will find it really difficult, right? You need to understand the concepts. Why are we doing what and when? 8 lakh 45 will now become the opening balance. On this 8 lakh 45, 685 into 13%. How much is that? Sir, 8 lakh 45, 685 into 0.13. 1 lakh 9,939. Exactly, it is matching. Okay. So 8 lakh 45, 2 lakh 84 minus 1 lakh 9,939 will give you the principal amount. 8 lakh 45 minus principal amount will give you closing balance. This keeps on going, yeah, for 5 years, and if you see at the end of 5th year it will become 0. Obviously a loan will also come to an end, right? How did I calculate this 32,708? 2,51,603, 2,51,603, 2,51,603 multiply by 13%. It's coming 32,708 exactly, matching. Okay, so 2,84,315 minus 32,708 will give you principal amount. Opening balance minus principal will give you closing balance, ending up with 0. So if it is not ending up with 0, you have made a mistake. If it is not ending up with 0, hey, there can be rounding of error. There can be 20 rupees, 30 rupees, till 100, even till 1000 rupees, don't bother. Even till 1000 rupees, there can be rounding of error. But if it is in, say, lakhs, then you have made some problem. Or if it is more than 1000 rupees, then you have made some problem, right? You have made some error. So you can cross verify if you have done this schedule properly or not. Sir, why did we do this schedule? I'll tell you why. This schedule was very important for you to calculate interest. Installment is already calculated. Installment is the total outflow, but there is interest in that installment, and there is tax savings on the interest component alone, right? That is why finding out interest every year becomes very important. Now what you have to do, you have to compute tax savings on interest. But wait, first let's compute depreciation also, because both interest and depreciation are having tax savings of how much? The tax percentage is 35%. So interest and depreciation both will have a tax saving of 35%. Now computing depreciation. 10 lakhs, 15% is WDV. So 10 lakh into 15%, 1 lakh 50. 8 lakh 50 will be the WDV. 8 lakh 50 into 15%, 1 lakh 27. 1 lakh 8, 92, 78301. I have told you the shortcut also. Sir, what is the shortcut? Yeah, I hope you remember the shortcut, yeah. For WDV, first you do 10 lakhs into 0.15. 1 lakh 50 into 0.85 to 0.85. 1 lakh 27,500 into again 0.85 to 0.85. So this will give you the answer for all the 5 years. Like this you have to do using the shortcut in the calculator so that it becomes easier for you to calculate. Okay. WDV at the end of 5th year is how much? Yeah. So WDV at the end of 5th year is 4 lakh 43. Scrap value was how much? 1 lakh. Oh my god. Book value is 4 lakh 43. We have sold it for 1 lakh. 3 lakh 43,706 rupees of loss. 3 lakh 43,706 rupees of loss in the 5th year. On this loss we will have what? Tax savings on capital loss, 35%. Since the method is WDV, we do not deduct salvage value from the cost of the asset. Hence this happens only in SLF. That is just for your normal information. So now what I have done now, hey, this is your step number 7 if you remember. Okay, working note number 4 is your step number 7. I am coming step by step only. First we calculated or we figured out what is interest rate, what is discount rate, what is tax rate, etc. Then we computed installment. After computing installment, we computed interest. After computing interest, we computed depreciation. After computing depreciation, we are now computing tax savings on interest and depreciation. So depreciation I am writing here, interest I am writing here. I am adding both, multiply by 35%. This is your tax savings. This is your tax savings. Done. No more working. Now come back to the main solution, final solution. Okay, this table is your main solution. Okay, so the entire workings sorted or cut short, or sorry, not cut short, presented in one table, right? So your outflow is 2,84,000, 2,84,000, 2,84,000, 2,84,000, 2,84,000. Every year we had the same outflow of installment, but inflow was not the same. Sir, inflow was 98,000 in first year, 83,000 second year, 68, 52, 53 and 38. So this you will have to deduct it here, right? What are they? They are nothing but tax savings on interest and depreciation. Okay. But in the last year, okay, present value of salvage is 1 lakh. This 1 lakh is an inflow, right? At the end of the 5th year, we are going to sell the asset and get how much? 1 lakh. That is also an inflow. 1 lakh is also an inflow. And I think I have not considered, okay, I have not considered tax on sale of asset. That is, I have not considered tax savings on capital loss. I have not considered this. Just written a note. I told you already, write a note. But I would have recommended you to compute tax, sale, or just write an alternative view. Alternatively, if we had considered tax on sale of fixed asset, the answer would have been different. More than sufficient. You will definitely get full marks. Don't worry. Okay? Because question is not clear. They have not told us to find out tax on sale of asset. No, they have not told us. So it's up to us. And ICA did this note only. This is ICA question, ICA solution only. Okay, so we are done with that tax savings on capital loss. We are not bothered about that. Only this 1 lakh will bring it to the present value. Present value is at 12%, not at 13%. We used 13% here only, but discounting factor is only 12%. Please remember that. Making a mistake here will make or spoil your entire solution. I am telling you. Be very careful. Bring everything to the present value. Total is coming to 7,09,353. This is the cost for borrow and buy option and not the profit. Okay, 7,09,000 is the cost if you are going for borrowing and buying the asset. Now let us compare this 7,09,000 with what? Sir, with the leasing option. Leasing option is a very small working, yeah. The entire option 2 itself is this much only. Option 1 only takes you time. Option 1, what all did we do? Finding out installment, finding out interest, finding out depreciation, finding out tax savings on interest and depreciation, right? And after that, going to the main table. Main table, outflow was installment, inflow is tax savings. Multiply it with the present value factor. Present value factor is different from interest rate. Remember that. I hope you got the idea, right? Do let me know if it is not clear. Yeah, I am always there for help. By nature, I am a helpful person. Okay. Okay. So cash flow 3,30,000 minus 1,15,500. Sir, how 1,15,500? Yeah, out of this 3,30,000, 35% is tax saving. Okay, sir, 3,30,000 to 0.35. That means 1,15,500. You are correct, sir. So 3,30,000 minus 1,15,500, 2,14,500 is your outflow every year if you are going for leasing. And this is an annuity. The same lease only, right? Every year, annuity of 2,14,500 multiplied with PVAF 12%. Don't use 13%. Don't dare to use 13%. You will have to use 12%. 13% is used only for installment calculation, not for this. 5 years. How much is the outflow? 7,73,208, which is better. 7,73,208 because there it was 7,09,000. Sorry. 7,09,000 is better than 7,70,000, right? So option 1 is better. option to borrow and buy is a better alternative. In fact, this one line consists of 1 mark. Though your solution might be wrong, if you have written the comment properly, you will get 1 mark. You have seen that, I have shown you that. Done? Yeah, I hope you were able to understand. Kindly reply me now so that I will be comfortable. I'll be satisfied. Question 2 was a good question. We have understood it. Was it clear? Okay, clear, is it? Thank you. Thank you so much. Solution 1. See, the main crux of this solution book is the presentation. Such a beautiful presentation. You might not find it in, right? Go and check your ICA book, your CMA study mat. You'll find the difference. A lot of difference might be there. And I've tried to present in a beautiful, colorful way that is attractive, right? Okay, not an issue. Not boasting much about myself. Let's go to solution number 1. Question number 1, let's discuss. Question number 1. Go through the question, yeah. At least give me some time to have some water. Till then, go to the question. Okay, thank you. So I hope you would have gone through the question. Planning of installing power saving machine, considering buying or leasing. Similar type of question only. Machine is subject to SLM. Thank God. Because in SLM now, generally you will not have tax savings on capital loss or capital gain will not be there. Can raise debt at 14% payable in 5 equal installment. Annual installment of 1,78,000. They have already given you 1,78,858 of annual installment. Wow. 14% is the interest rate. Already given. Wow. At the beginning of the year, you are paying in 5 equal installment. Not at the end of the year. At the beginning of the year. Very important because it is different. Okay. So at the beginning of the year means there are totally 5 installments, right? So 1, 2, 3, 4, 5. So beginning of the year means at year 0 you will make 1 installment. At the end of year 1 you will make 2nd installment. At the end of year 2 you will make 3rd installment. At the end of year 3 you will make 4th installment. And at the end of year 4 you will make 5th installment. First installment is here, 2nd, 3rd, 4th, 5th. So while discounting, bringing it to the present value, we should not do PV, IF, R percentage, 5 years. You have to do 4 years plus 1. Sir, why plus 1? See, 1, 2, 3, 4. 4 years. For 0 year, you have made an outflow, right? For that 0th year, if you want to bring to the present value, today's present value, multiply by 1, right? So plus 1, be careful here. Now, in case of leasing, the company would be required to pay an annual end of the year rent. So for leasing, it is only at the end of the year we have to pay rent. 25% of the cost of the machine for 5 years. 25% of the cost of machine. How much is the cost of machine? How much is the cost of machine? They have not given you the cost of machine in the question. Go through properly. They have not given any cost of the machine, right? So we have to find out cost of machine. How to find out cost of machine? Remember that formula? Refer your nano book. Go through that formula. Company is in 40% tax bracket. Salvage value they have given 25,000. Okay, 25,000 at the end of 5 years. Evaluate 2 alternatives. Consider the after tax cost of debt concept under both the alternatives. Oh my God, have they given any other percentage? They have given only 14%. Apart from 14%, there is 40% which is for tax. Have they given you present value percentage factor? Have they given you discounting factor? Have they given you required rate of return? Have they given you cost of capital? No. The only percentage they have given in the question is interest percentage. So for discounting, what will be the percentage I will use? 14% or some other percent? Can you reply me? For discounting, what percentage will I use? Will it be 14%? I am telling for normal discounting, not for discounting the installment. Normal discounting, final solution, which percentage will you use? 14% or some other percent? Let's discuss the solution. Till then, I'm waiting for your reply. Okay. So number one, working on number one. First thing first, we want the cost of machine, right? We want the cost of machine first. We know these are the installments, and these installments are providing 14% return. So discount this with 14% to get the present value. Okay, the present value will be the cost of asset, right? We are going to buy the asset today, so this is the present value. Present value is how much? It is coming to 7 lakh. It is coming to 7 lakh rupees, which is going to be the cost of asset. So DF at 14%, we are discounting it and getting the cost of the asset. Calculating depreciation, 7 lakhs is the cost of the asset minus 25. So without cost of asset, you cannot even calculate depreciation. Are you able to understand? So cost of asset becomes very, very important. There is one more alternative formula, yeah, I can tell you that also. If you want cost of asset equals installment divided by PVAF 14%, comma not 5, comma 4 years plus 1. So PVF of 14% for 4 years, how much is it? 1.14 divided by equals to M plus equals to M plus equals to M plus equals to M plus. For 4 years, the answer is, sir, the answer is coming to 2.914. Okay, 2.914 plus 1. That means denominator is 3.914. Installment is how much? So installment is 1,78,858. So 1,78,858 divided by 3.914. The answer is, I think I've made some mistake. It's a huge mistake. 1 second. I need to refer the chart once. So some mistake I've made. Unable to. Annual installment divided by PVAF interest percentage, comma n years, right? Okay. I think it should have been 1,78,858 multiplied by 3.914. Yeah, it should have been multiplied by okay, I think I have made a mistake in the formula itself here, is it? Okay, I have made a huge mistake of the formula itself here. Annual installment equals cost of asset divided by PVAF. So kindly grant me, I think it's a very big mistake. I should have checked this. Now only I am able to get to know it. The formula itself was wrong here. Okay, I've mentioned a wrong formula. It is annual installment equals cost of asset divided by PVAF, right? So this annual installment should be there in the left hand side, cost of asset should be there in the right hand side, the numerator. I don't know how this kind of a mistake happened, but nonetheless, thank God we have discussed this in the lecture. So instead of divide, you have to multiply and get 7 lakhs. The answer is the same. You are getting 7 lakhs. There is no mistake in that. I have done a wrong formula. Now only I am realizing it. Okay. It happens sometimes. But that was actually a bigger mistake. I should have avoided that. Please forgive me for that kind of a mistake in the nano book. Calculation of depreciation: 7 lakh minus 25,000 divided by 5, 1,35,000 is your depreciation. Again, you are just doing opening outstanding installment payment. See, first installment is paid at year 0 itself. If you are borrowing today, paying them today itself, will you pay interest? No, yeah. For 0 days, there will be no interest first of all. So interest will be 0 here. But be very careful, this is the most important point. Installment 1,78,000, principal will be the entire 1,78,858, closing outstanding. Now on this outstanding, we will calculate interest at 14% for 1 year, right? This figure is at year 0 only. Today itself we have paid him 1,78,858. 72, all these will come, principal here will become 0. Okay, just try this out on your own also. Try to go through, try to use your calculators. Don't be sitting idle. If you are sitting idle, you are doing a big mistake here. Use your calculators, at least try to do something from your side. Don't expect everything to be from my side, right? Okay, so we computed interest, we computed depreciation. Depreciation will be the same for all the 5 years. It is SLM, interest plus depreciation, for year 0 to year 5. Sir, why year 5? Because year 5 you might not have interest, but you are having depreciation, right? That is why I had taken question number 2 first before question number 1. Here you are having depreciation, here you do not have interest. Be careful here. This is the total. On this total you will have tax savings of 40%. You will have tax savings of 40%. Sir, what about discounting factor? They have not given any discounting factor, neither present value factor. You will use KD. This is what I asked you, right? You didn't reply me. No one replied me. So KD equals 14% into 1 minus tax. 14 into 1 minus 0.4, that means 8.40%. This is your present value factor. This is what you will have to discount using 8.4 post tax KD. And okay, now let us go to the main solution. 1,78,95. This we have computed in working note number 4. So working note number 4, right? Yeah, working note number 4. From here we have taken straight away, and these figures it is already given in the question. Installment is an outflow, right? Minus this tax savings. Okay, finally we have discounted using 8.4. Most important point. If you have used 14%, your entire solution is gone. Wrong. But we use 14% here, right? So be very careful, because here we are finding out what? Here we are finding out installment in working note number 1. But in the main solution we are not finding out installment, we are finding out present value. 4,69,929 is the total present value of cash outflow if you are going for borrow and buy. See, once borrow and buy is done, right? Second option is very simple. Leasing, it doesn't have much of the content. Lease rental will be how much? They have told that 25% of the cost. Cost we have computed in working note number 1, 7 lakhs. 7 lakhs into 25%, 1,75,000. You have to pay for 5 years. On this 1,75,000, can I tell you will have tax savings of 70,000. So net outflow is how much? 1,05,000 every year for the next 5 years. 1,05,000, 1,05,000, 1,05,000, 1,05,000 and 1,05,000. Discounted with 8.4. Outflow is 4,14,000. Which is better? Sir, leasing is better any day. 4,14,000 is less than 4,69,000. Done. I hope you have understood this point. Comparison of leasing versus borrow and buy. Question number 1 and 2 is done. Clear, right? I hope you can reply, it will be better, so that satisfied. I think we can also try to do question number 3. Question number 3. I'm not going to discuss in detail. Let's discuss from here itself. It's a homework for you. Okay, thank you. Discounts at cash flows at 16%. So this is your present value factor. Discounting. Tax bracket 35 for the acquisition of a machinery worth 10 lakhs. So they have given you the cost of asset. Cost of asset is already given. It has two options. Acquire the asset by taking a bank loan at 15%. This is your interest percent. This is your present value percent. Repayable in 5 yearly installments of rupees 2 lakhs each. Installment they have given 2 lakhs each. They have given the cost and installment both. In installment they have given 2 lakhs each plus interest. So this 2 lakhs, is it the installment amount? Is it the principal amount? Is it the interest amount? Can you just tell me, reply me fast? Is this 2 lakh? This is the only crux here. This is the only difference in this question. Rest of everything is the same. This 2 lakhs, is this the installment amount, principal amount, or interest amount? You need to answer. I'm not going to show you this. Unless and until you're answering me, I'm not going to go forward towards the solution. Or to lease the asset at yearly rentals of 3,34,000. So rental also they have told 3,34,000 for 5 years. In both the case, installment is payable at the end of the year. Installment is payable at the end of the year. Okay. Depreciation is to be applied at the rate of 15% using WDV. Depreciation will be how much? 15%. WDV method. Again, you are required to advise the financing option is to be exercised and when. Consider tax on sale of asset if residual value is nil. You have to consider tax on sale of asset if residual value is nil. You have to consider, they have given you here itself. You cannot write a note that since lack of information we have ignored tax on sale of asset, because in the question itself they have given you. Okay, you are wrong. It's not the installment amount. This is the principal amount. Sir, how principal amount? They have given you 2 lakhs each plus interest. They have not given installment. 2 lakhs is the principal plus interest. We have to compute that only. To compute installment is very simple. How? You know the formula, right? What was the formula? The wrong formula. Don't tell me the wrong formula. The right formula. Installment equals cost divided by PVAF R percentage n years. So cost is how much, sir? Cost is 10 lakhs divided by PVAF for 15%. PVAF 15%, comma how many years? 5 years. So 1.15 divided by equals to 1, 2, 3, 4, 5. Total is 3.352. Okay, 3.352. So 10 lakhs divided by 3.352. The answer is, if I am not wrong, installment is coming to 2 lakh 98,316. Instead, I think I am wrong in this. Should not be like that. They have given you equal principal amount. It's very simple. I'll discuss with you while coming to the solution. So what are the different things is, the principal is given already 2 lakhs, 2 lakhs, 2 lakhs, 2 lakhs, 2 lakhs. On this opening outstanding of 10 lakhs, interest is 15%. So 10 lakh into 15%, 1 lakh 50. Principal 2 lakh given. Principal plus interest will give you installment, right? You cannot use the formula here. So 3 lakh 50 is the installment. Installment varies. It's not equal installment. The formula is only for equal installments, not for varying installment. Here, principal is equal, not the installment. You cannot use the formula. Closing is 8 lakh. On this 8 lakh, 15% is 1 lakh 20. 6 lakh 15% 90,000. 4 lakh 15% 60,000. 2 lakh 15% 30,000 rupees. So once you have got the interest, you already know the principal. Principal plus interest will give you installment. This was one unique thing here. Next is computation of depreciation. 4 lakh 43 and minus 0. So you have made a loss of 4 lakh 43,706. On this 35% you will save tax. On which year? Only at the end of 5th year. Okay, not for all the years. Saving tax of 1,55,297. This is an inflow. It's not an outflow. So if you go through this here, I would have reduced this 1,55,297. This is nothing but, so this is tax savings on capital loss. Tax savings on capital loss. They have specified in the question. You have to compute this. These are all nothing but tax savings on interest and depreciation. These are all nothing but your installment. See, installment is changing here. 3 lakh 50, 3 lakh 20, 2 lakh 90, 2 lakh 60, 2 lakh 30. Sir, what is this 1 lakh 5,000? This 1 lakh 5,000. Yeah. So this 1 lakh 5,000 is nothing but year 1, right? It's year 1. Sorry, extremely sorry. Where is that question? Yeah, year 1 order tax savings on interest and depreciation. Very simple, right? Okay. So same way you will have to compute for Second option, I hope this was also good. If any doubts, do let me know so that I will stop it. Okay. 3,34,000 they have given, into 35% will be the tax savings. So outflow will be 3,34,000 minus 1,69,900 into 16%. Here you will lose 16%. But if you go for this table, you will use 15%. Here again you will use 16%. This is what is the main thing of these questions of leasing, right? So 3 questions done. Now let us go to the 4th question, but before 4th question I need to check if that concept is covered. Okay, before taking this concept, I would like to further continue with our nano book. Let me try to conclude all the other concepts of leasing. See, generally net advantage of leasing, I have not seen many questions, rarely they ask from this concept, but it's very simple. If you have understood till now, it's nothing but the continuation of that. What is net advantage of leasing? Net advantage of leasing. How much is the advantage in leasing over hire purchase? This is an alternative method. Calculation of benefit in leasing when compared to hire purchase. If the answer is coming in positive, go for leasing. If the answer is coming in negative, go for hire purchase. Right? So it is an alternative method. Instead of using this method, till now whatever you have seen, right? Instead of using this method, you can also use this method to compute which is better, leasing or borrow and buy. But if you go to the format, right, benefit of leasing, sir, what is the benefit of leasing over hire purchase? First of all, if I am going for rent, can I tell I am saving the entire cost of asset? Purchase cost I am saving, right? Entire purchase cost I am saving. That is a saving for me. It is a benefit, right? And this cost of asset today, in today's value we have to compute. Cost of asset in today's value, present value of benefit. Cost of leasing, sir, what is the additional cost of leasing? Every year I need to unnecessarily pay rent, but in hire purchase I am not paying any rent. So here it is an additional cost, cost of lease rent, net of tax savings. Don't forget to reduce the tax savings on rental payments. You have to reduce that because that is an inflow. Tax savings on rental is an inflow. So net of tax savings. One more thing, add loss of tax savings on depreciation. If I go for leasing, am I going to debit depreciation? No, there is no depreciation in leasing. So that tax saving is also lost. If I go for hire purchase, I would have saved in tax savings on depreciation. But in leasing, I am not doing that. I am not saving any tax savings on depreciation. Hence, it becomes an additional cost in leasing. We are foregoing this. This is an opportunity cost. This is an opportunity cost. I hope you are able to understand. Add loss of terminal value. Had I gone for hire purchase, at the end of 5 years, I would have sold the asset and got some terminal value. But leasing, I am not the owner. I cannot sell the asset. Right? So that is also lost here. Opportunity cost. Net of capital gain or loss. This you have to take care. Net of capital gain or capital loss tax. So this is the format. Present value of benefit. If it is more than present value of cost, go for leasing. Present value of benefit, if it is less than present value of cost, go for hire purchase. It's not like don't go for leasing, go for hire purchase. So this is an alternative method. There is one question in your CMA study mat where they have asked you to find out net advantage of leasing, NAL. So there you can use this format. Nothing but only using the format. Did you understand? I just want one confirmation. Did you understand why are we adding loss of tax savings on depreciation? Because this is not available in leasing. Opportunity cost. Had I gone for hire purchase, I would have got this one. That is why I am adding as a cost. This is an extra cost in leasing. Same way, this is also an extra cost, right? So all these costs we have to bring it to the present value. Don't forget to bring it to the present value. We are comparing present value of benefit, present value of cost, right? If NAL positive, choose leasing. NAL negative, choose hire purchase. Next kind of concept is your IRR technique. Sir, what is IRR technique? Internal rate of return. You already know what is internal rate of return of lease option from the viewpoint of lessee or user of asset. computation of IRR, effective cost of leasing for lessee. Present value of benefit should be equal to present value of cost. So at what point my present value of benefit is equal to present value of cost, that point is IRR. That point is IRR. So cost of asset is already in present value only, right? This should be equal to payments of lease rental, tax, savings on depreciation, loss of terminal value. So it's nothing but the same thing which we have done here. The only thing is we are equating this equals this. We are equating this A equals B. We are not doing minus. A equals B. We should find out the discounting factor at which A equals B. Here this discounted is there, right? This discounted. This discounting factor only we are finding out in IRR, such that there is no difference between leasing or hire purchase. Both will be the same at this discounting factor of IRR, internal rate of return. Thank you. Using trial and error method discussed in capital budgeting chapter, calculate such discounting factor. See, once you have got this cost right, we will have to use trial and error method. Bring it to the present value such that it is equal to cost of asset. Say at 12% we discounted. Cost of asset is 10 lakhs. Okay, at 12% discounting, we got the answer as let's say the cost came to 15 lakhs. Okay, and then we increase the rate. We increase from 12% to 15%. At 15%, the present value of cost exactly came to 10 lakhs. It might also be more than 10 lakhs, right? As you all know, higher the discounting factor, lower will be your NPV. Lower will be your present value. Higher the discounting factor, lower will be your present value. That is why if I increase this discounting factor, my present value will decrease. My present value will decrease. Sir, what if this is coming to 8 lakhs? If it is 8 lakhs, then I hope you remember the timeline method. So 15 lakhs at 12%, 8 lakhs at 15%. Sir, I want that percentage at which it becomes 10 lakhs. This model timeline method we have seen n number of times, not taking it now. Okay, so this is how you compute what? IRR, internal rate of return, for lessee point of view. There is separate IRR for lessor point of view. I'll show you there. Okay, done. So this was IRR we have discussed. Net advantage of leasing we have discussed. Next concept, hence IRR indicates that level of discounting factor at which both options will have the same present value of cash outflow, indifferent. Both options will be same, equal. This is your IRR. Okay, you can also try to get motivated. These are all my own quotes here. I am not copied pasted from anywhere. Though you might find similar words, but I have not copied pasted. These are all my own thoughts. Right? Okay. Now let me also try to complete this concept of fixation of lease rent. This is the last concept. After this, we'll start part 2. But before starting part 2, I'll take two or three more questions from your question book also. Okay. But let me just try to make you understand what is fixation of lease rent. See, now lease rent also can be varied, right? Sir, generally lease rent are fixed in any of the following formats. Equated annual plan. What is equated annual plan? Lessor agrees to receive same amount of lease annually. Same amount of lease every year. 10,000, 10,000, 10,000 every for all the 5 years. But there can be different kinds of leasing arrangements, right? My owner is telling me that pay 10,000 in first year, 12,000 second year, so 14,000. This is your stepped up plan. Lessor agrees to receive lease rental in an increasing order. 10, 12, 14, 16, 18, 20. This is your stepped up plan within a specified system. Let's say every year you have to step up by 10% per annum. Generally, in practical world, this method is followed. Practical world, this method is followed. But most of our questions will be from equated plan so that it becomes easy for us to solve. Stepped down plan. Stepped down means receive lease rental in a decreasing order. It happens less, but yes, in some situations you also have a stepped down payment. In fact, the next question number 4 is regarding this question only, the step down plan. Balloon payment. Sir, what is balloon payment? In balloon payment, lessor agrees to receive less amount initially and lump sum amount in the last year. For the first 4 years you give me less amount, but for the 5th year you have to give me huge amount. That is balloon. And the 5th type of payment plan is deferred. Sir, what is deferred? Lessor agrees to receive lease rent only after some initial years have passed. For the first few years you don't even give me any rent, but after this few years you'll have to pay. The payment structure in later years may be in any format, right? So in the later years it can be in any format. Let's say equated, stepped up, balloon, etc. Step down, balloon, deferred, stepped up, equated. So these are the 5 types of rental arrangements which can be made between lessee and lessor. Done? Okay, great. Okay, done. Let me now go through the next question. Question number 4. Question number 4. Open your question book. Question number 4, let's discuss. Fair Finance, a leasing company, has been approached by a prospective customer. I am a leasing company, Fair Finance. Customer approaches me, intending to acquire a machine whose cash down price is 3 crores. He wants to acquire a machine, cash down price, that the price of the machine is 3 crores. Customer, in order to leverage his tax position, has requested a quote for 3-year lease with lease rental payable at the end of each year. So he wants to get a machine on rent from us. We are Fair Finance, a leasing company, but in a diminishing manner such that they are in the ratio of 3:2:1. He wants to pay the rent not equally, not in equal amounts, but in stepped down. This is stepped down, right? 3:2:1. This is not stepped up, stepped down payment. Okay, step down payment of lease rental. Depreciation can be assumed to be straight line, and Fair Finance marginal tax rate is 35%. So tax rate is how much? 35%. Target rate of return for Fair Finance on the transaction is 10%. Target rate of return for Fair Finance on the transaction is how much? 10%. Required, calculate the lease rental to be quoted for the lease for 3 years. Calculate the lease rental to be quoted. You have to find out lease rental. How much should you quote such that you are able to get a rate of return, that is a discounting factor of 10%. Your expected required rate of return is how much? 10%. You have to quote lease such that you are able to earn 10% in such a manner that lease rental is 3:2:1. Tricky, right? And it is very helpful even in your practical life. You all are doing this. You want to say let's earn 20%, and that tenant is selling that he will pay 3:2:1 or 1:2:3. You want to calculate how much should you keep the rent such that you are able to get 10%. Don't you think this is the same kind of a problem? Practically it is relevant. Let us try to understand how are we going to calculate lease rental, right? Question number 4. So 4 is this one. So if property is given on lease, the amount of lease expected will be cost of asset minus tax savings on depreciation. First, let us think from the lessor point of view. Don't think from lessee point of view. Think from lessor point of view. For me, I have paid how much to buy the asset? Cost of asset. That is an outflow. But I will also get inflow in the form of tax saving on the depreciation every year, right? Because I am lessor. Lessor will have tax savings on depreciation every year. That is an inflow for me. Every year I have that inflow. So I will have to compute my net outflow. Net outflow. So net outflow will be, let's say 3 crore is the today's outflow. 1 crore, 1 crore, 1 crore. Sir, what is this 1 crore, 1 crore, 1 crore? Straight line method. Zero salvage value. Per annum, how much will be the depreciation? 1 crore. So 35 lakhs, 35 lakhs, 35 lakhs I am saving every year. Bring them to the present value. Bring them to the present value. So present value net outflow is not 3 crores. Present value net outflow is only 2 crore 12 lakhs 99,000. Are you able to understand? 3 crores you paid to buy that asset, yeah. But every year you are getting tax benefit, right? Because of buying this asset. That tax benefit, if I am bringing the present value, this is the amount. And eventually my net outflow is not 3 crores. My net outflow is only 2 crore 12 lakh 99,000. So how much will I want to recover, yeah? I will want to recover this 2 crore 12,000 99,000 over a period of 3 years. Such that it is giving me 10% return. I know it is a little bit complicated, but let's see the solution, it will be more clear. Computation of lease X. How are we going to compute lease X? If the normal annual lease rental per annum is X, then cash flow will be C. First year 3X, second year 2X, third year 1X. We have to compute lease rental only, right? So we have substituted lease rental as X. We have substituted lease rental as X. Into 1 minus 0.35, 1 minus 0.35, 1 minus 0.35. So why are we doing this? Because lease rental also is after tax only, right? After tax. Think this particular point from the lessee's point of view. Lessee, he will pay 3x, 2x, 1x. But by paying this, he will also get tax benefit. He will also get tax benefit. So this is the tax benefit on rent. So present value of post-tax cash flow will be this much. We have discounted it at 10%, okay? So by discounting it at 10%, I am getting 3.3345x. Okay. Now, calculation of lease rent. This 3.3345x should be such that we are able to recover how much? 212.99 lakhs. Now again come back to the lessor point of view. Only for this purpose, you will have to think from lessee's point of view, because lessee will have tax savings, right? 3.3345x should be equaling to 212 lakhs. Don't worry, just wait for 2 more minutes, it will be clear. X equals 63.8746. So how much I am recovering in X? That is rent every year, 63.8746. So into 3 into 2 into 1. How much is the total I am recovering? So total you are recovering is this much. Add all these three. So if I am adding all these three, 191.6238 plus 127.7492 plus 63.8746, the answer is coming to 383.2476. How much I am getting? 383. But this 383 which I am getting, it becomes an inflow for me, right? As a lessor, rent is an income. So on this income, I will have to pay tax. I will have to pay tax, right? Lessor point of view, it is an inflow. Rent is an inflow. On this rent, we will have to pay tax. How much of tax? 35%. So remaining will be how much in our hand? Sir, remaining is only this much in our hand. We are lessor. We are lessor. So how much is there remaining in our hand? 124.5555 plus 83.037 plus 41.5185. 249.111. This is what as a lessor I am getting for the matter of 3 years. But these are in future value. Bring it to the present value. Okay, bring it to the present value at 10%, because 10% is your required rate of return. So if you bring it to the present value, how much is the answer? 212.99. So eventually, to recover this 212.99 and to get a return of 10% per annum, you will have to in total get how much? 383.2476. Why 383.2476? Because after this you will have to pay a tax of 35%, and after deducting tax, the net which is going to be there in your hand will be only 249.111. Though you will receive 383, but after you have to pay tax, and net in hand will be how much? Only 249.111. 249.111 is in future value. Bring it to the present value. Present value, if you bring it, it becomes 212.99. So this difference is your 10% income which you are able to get over a period of 3 years. I hope it was easy. It is little bit tricky, I understand. But okay, you have to think from the viewpoint of lessor, not lessee. Lessor, lessor. If you want, even this you can think from the point of view of lessor. Sir, how? See, these are all inflows for lessor, Out of these inflows, you'll have to pay tax. This will be the net benefit for lessor. So even from lessor's point of view, you can calculate all the points. In between I told that this you can think it from the viewpoint of lessee, but ignore lessee, just think from the viewpoint of lessor. Lessor, after receiving lease, he will have to pay tax. So that tax only we are deducting here. That tax only we are deducting there. Okay, thank you. Hence, you have recovered a net after tax lease rental of 212.99 from the lessee in present value. In present value terms, you have recovered how much? 212.99. Therefore, ensuring 10% return, also keeping lease rental in the ratio of 3:2:1. Right? So, this is how we can calculate this particular question. It's an important question, 8 to 10 mark question for sure. Let's now go for question number 5. Sorry. Okay, I will first discuss the concepts from lessor's point of view, which are here. Okay, then I'll go for the next 5 more questions are pending. Right? So from the viewpoint of lessor, NPV technique of evaluation. For a lessor, what is his decision? Yeah, his decision is how much of rent should I collect, such that my percentage of return is 12%. How much of rent should I collect, such that my percentage of return is 15%, 20%, 25%, 10%, whatever his decision is. He has to fix what? He has to fix his future value of inflow. He has to fix his rent. That is the work of owner, right? NPV technique of evaluating lease proposal from the viewpoint of lessor. Present value of CFAT from leasing proposal, add present value of terminal value, that is also an inflow, right? Okay, less initial cash outflow. See, today we are going to buy that asset, we are going to make payment. Today we are going to make payment and we are going to receive rent over a period of 10 years. These are all inflows. This is an outflow. So outflow is in present value terms, inflow is in future value terms. Bring all of the inflows to present value. Present value of cash inflow minus present value of cash outflow should be positive, right? So the NPV of the lessor, this should be positive. If it is negative, then what the lessor should do? Lessor should increase the rental. If NPV is negative, lessor should increase the rental. He should not be able to, he should not give the asset on lease with that rent, because NPV is negative. If NPV is positive, that means he is earning more than required rate of return. A required rate of return is the rate at which he will discount, right? This is a discounting factor. If NPV is positive, lease proposal is accepted. If NPV is negative, lease proposal is not accepted. As simple as that. Similar to what we have already done in capital budgeting, investment decision. Yeah. Computation of annual CFAT. So what are our cash flows, inflows? Lease is obviously a cash inflow. Apart from lease, less annual cash expense on the asset. Let us say if I have to bear some repair expense, we have to repair. Generally, even if we are in a rented house, any repair will be done by our owner. So if that is there, reduce that. Why reduce? Because that is an outflow. Annual profit before depreciation and tax, less annual depreciation will give you PBT, less tax will give you PAT, add depreciation, get CFAT. Similar to CFAT discussed in capital budgeting. Right? Similar to CFAT discussed in capital budgeting. IRR technique, lease evaluation for lessor. So I hope you were able to understand this. The same thing as how we have to compute CFAT, the same thing. NPV model. IRR technique, lease evaluation for lessor. Present value of cash inflow of lessor should be present value of cash outflow of, that will give you IRR. What will be the present value of cash inflow? Sir, present value of CFAT, add present value of terminal value. These are the cash inflows, right? And what is outflow? Cost of asset. Cost of asset will be the outflow for an owner. Obviously, he is going to buy the asset, and every year he is going to get lease rental. Lease rental less depreciation, less tax will give you PAT. Add back depreciation to get CFAT. Don't forget terminal value, net of capital gain tax. So this IRR means, it means, for example, let us say we have quoted 5 lakh rupees of rent per annum for 3 years. 5 lakh rupees of rent per annum for 3 years. We have to compute by taking this 5 lakh, by charging 5 lakh rupees of rent, how much percentage we are earning. How much percentage we are earning, that is your IRR. Next is your break-even lease rentals. What is break-even lease rentals? Probably the last part to discuss in your nano book. Lessee point of view, it is that lease rental at which lessee remains indifferent. Break-even. Lessee remains indifferent between leasing and buying. This is nothing but the same is your IRR. So break even from lessee point of view is nothing but IRR of lessee, at which both leasing as well as hire purchase are both giving the same cost for lessee. That is IRR, and that is your break even. Lease amount payable can be substituted as X. So computation of present value of lease rentals for 5 years after tax, it should be after tax, right, into PVAF should be equal to present value of cash outflows as per hire purchase. So is the same thing what we discussed here, yeah, nothing different. This is your break even point. This is your break even point for lessee, and same way it represents the minimum lease rental that the lessor can accept at which NPV becomes 0. This is your break even for lessor. IRR of lessor is the break even point for lessor. IRR of lessee is the break even point for lessee. So now in total I would just recommend you to remember these two tables. Which two tables, sir? This table and this table. If you remember these two tables, this concept is covered over here, that is your break even is covered, right? And in fact even net advantage of leasing is covered. All are covered. You just need to remember IRR of lessee, IRR of lessor. I hope I was clear in explaining you. Little bit tricky, I know that. Once you are seeing a question, it will be more comfortable. So with that, I think I have discussed all the concepts from your nano book. Let's now move ahead to complete your pending questions from question book. Right? Let me have some water. Okay, thank you for me. Let me now discuss question number 5. Question number 5, a leasing limited leases X Builders Limited earth moving equipment for 50 lakhs for 5 years. A leasing limited leases X Builders 50 lakh worth equipment for 5 years, salvage value nil. After 5 years, X will have option to buy the equipment by paying 1000 rupees. IT Act allows straight line depreciation at 20% on cost and tax rate is 40%. If lessor is entitled to claim depreciation, then what type of lease arrangement is this? See, this is purely a question of AS 19. If you are not able to understand AS 19, you will not be able to understand here, and I am not going to discuss in detail regarding AS 19. It is just that I just took this question. They have not asked this. I think only once they have asked. If lessor is able to claim the depreciation, then this is an operating lease. There are two types of lease, operating lease and financing lease. I am not discussing all that, yeah, please spare me, because these are all accounting concepts, AS 19. Please go and refer that. What will be the tax savings per year to the lessor? If 12% is the required rate of return, how much lease rent lessor can charge? This is from the viewpoint of lessor, this question, right? What will be the tax savings per year to the lessor? What will be the net cash outflow on account of lease rental to the lessee? Let's discuss this solution 5. Easy question only, nothing much to worry. Part A is it is an operating lease as per AS 19. Part B, calculation of tax savings per annum for lessor. Tax savings will be 50 lakh, that is 10 lakhs of depreciation is there, right? on this 10 lakhs of depreciation for lessor, he will get what? Tax savings. Here interest tax savings is not there. He is not lessee. He has already bought the asset. He's already bought the asset, and he has to, the depreciation which is going to be there in the P&L debit side, that will only have tax savings. Okay, so tax savings will be 10 lakh into 40%, 4 lakhs. Lease rental for 12% required rate of return. Cost of the asset is 50 lakhs. Discounted by 12% such that his least expectation from lease would be how much? 3 lakhs. Year 1 to 5. After tax lease rental income. Why? Because if I get 1 rupee from the lessee, if I'm getting 1 rupee as lease rental from lessee, out of this 1 rupee I will pay 0.4 as tax. So in my hand I am not having 1 rupee. In my hand I will have only 0.6. I should make sure that this 0.6 is generating me 12% return, not that 1 rupee. So 0.6x plus 4 lakh inflow, right? Every year I am going to have tax savings of 4 lakh. That is an inflow. So 0.6 plus 4 lakhs, this is going to be there for 5 years. Assuming equated rentals. There are 5 types of rental. Since there nothing has been given, we will also assume equated rentals. Discount this at 12%. This is the answer. This should equal to what? 50 lakhs. If this is equal to 50 lakh, that means our IRR is 12%. That means our internal rate of return is 12%. That means we have got a return of 12%. So equating this to 50 lakhs, X is coming to 16 lakh 47,407. To understand even better, 16 lakh 47,407 into 1 minus 0.4. In our hand, every year we will get how much? Sir, every year we are getting 9 lakh 88,445. This will be the cash outflow for lessee. The same is the cash inflow for lessor, right? The cash outflow for lessee is the cash inflow for lessor. That means, once again, lessee will pay 16 lakh. I'll just tell you once again. This will be cash paid by lessee. How much is lessee paying? 16 lakh 47,407. Okay. Now the 16 lakh 47,407 lessor is receiving from lessee. I am bifurcating this into two. Lessee point of view, lessor point of view. This is the payment already done by lessee. But out of this payment, can I tell there will be tax savings for lessee? How much is this tax savings? Sir, 16 lakh 47,407 into 0.4. Tax savings itself is 6 lakh 58,963. This is the tax saved by lessee. But if lessor received this 16 lakh 47, this becomes an income, right? This becomes an income, and on income there is tax expense. Sir, how much will be the tax expense? The same 6 lakh 58,963. Are you able to understand? This will become tax expense. So net cash inflow for lessor and net cash outflow for lessor, both are same. Both are same. So 9,88,445, I will receive it for how many years? 5 years. 9,88,445 multiply by 3.605. Oh, sorry, 9,88,445 plus 4 lakhs, right? Why 4 lakhs? Because there is depreciation tax saving, right? So 9,88,445 plus 4 lakhs. This is 13,88,445. I will receive this amount for 5 years. 5 years, but these are in future value. Bring it to the present value. To bring it to the present value, multiply with 3.604. So into 3.604, we are getting the same answer, 50 lakhs. Exactly 50 lakhs. Calculate in your calculator. It's not exactly 50 lakhs. There is some rounding of difference. But yes, obviously, if you take more than 3 decimals here, it will exactly round up to 50. I hope you are able to understand this lessor's point of view. Little tricky but easy to understand. Once you have understood, it's very simple. You can let me know if there is any doubt, okay? Done? Okay. Now let's go for the next question. Question number 6. Question number 6. Go through this question once first. If there is any doubt, you can let me know. Yeah. Question number 6. ABC is in the manufacturing of aluminum components. It wants to expand, for which it needs additional machine. Firm can either buy or take the machine on lease. Can either buy the machine or take the machine on lease. The machine can be purchased for rupees 30 lakhs. Cost of the asset 30 lakhs. It will have a useful life for 5 years with residual value of rupees 2 lakh after the expiry of 5 years. Useful life is how much? 5 years. Residual value of 2 lakhs after the expiry of 5 years. The purchase can be financed by 15% loan payable in equal installment. Equal installment they have told, and 15% will be what? 15% is the interest percentage. Yeah, this is the interest percentage. This is the interest percentage. Okay. And what else they have given? Else the machine can be taken on lease at a lease rental of 9 lakh rupees per annum, payable at the end of each year for 5 years. So else the machine can be taken on lease, 9 lakh will be the lease rental, end of every year for 5 years. Depreciation for tax is to be charged as per reducing balance method. Okay, what is reducing balance method? Nothing but your WDV method. Reducing balance is nothing but your WDV. Rate of depreciation is 25%. Maintenance expense of the machine is 50,000 per annum, and the expenditure is to be borne by the lessee. Who is going to bear maintenance expense? Lessee. So which option is better, lease or buy? Clearly demonstrate cash flow analysis and other workings. Okay, so both the cases, lease or buy, are from the viewpoint of lessee only, right? If the lessee is buying and using the asset, even then you will have to pay 50,000 of maintenance expense. If the lessee is getting it on rent, even then you will have to pay the same 50,000. So it is indifferent. If you want, you can ignore this 50,000. I hope you were able to understand. Only if it is lessor who is bearing maintenance expense, in that case now it is different. If it is lessor who is bearing the maintenance expense, then in lease option you will not have maintenance expense, but in borrow and buy you will have maintenance expense. Okay. So life, interest, tax, discounting factor is nothing but interest, that is KD. KD equals interest into 1 minus tax, because there is no other percentage given in the question. Depreciation 25%, WDV, lease amount 9 lakhs. So option 1 is leasing. 9 lakhs, tax savings on lease 40%, 3 lakh 60. Net lease payable 5 lakh 40. 5 lakh 40. Cumulative discounting factor of 9% for 5 years, 3.89. Multiply 5 lakh 40 with 3.89. 21 lakh 600 is your outflow. Who are you? Lessee. There is no lessor in this question. It's only from the lessee's point of view. Don't get confused. There is nothing regarding lessor. You have to find out, should you go for leasing or should you go for borrow and buy? The same thing which you have been discussing from the beginning. Equated annual installment. You can just use this formula. Find out equated annual installment is coming to 8,94,988. Opening into 15% will give you interest. Installment minus interest will give you principal, and opening balance minus principal will give you closing balance. The same thing, it should end up in 0. Depreciation calculate based on WDV, 25% of WDV. So 7,11,000 is the book value, salvage value is 2 lakhs. On this 5,11,000, 40% will be the tax savings. This will be there only at the end of 5th year. Not all years, only at the end of 5th year. It's the same thing, yeah, nothing different here, okay? We shall ignore maintenance expense because it is applicable under both the options. Very important. See, lessee, even if he is taking on lease, he will have to maintain that particular by giving 50,000 rupees. Or if he is borrowing and buying the asset, he is only using it, right? In that case also he has to pay 50,000 of maintenance expense. So both are same, hence we have ignored it. Sir, I want to take that, I want to consider. Okay, you consider, you will get the same answer only. Even if you consider, you will get the same answer. Better to consider, yeah. Don't get confused. If you are getting confused, you consider, the answer will be the same. The amount will not be the same, but which option is better, that will be the same, because amount will be differing. Okay, rest of the things are very similar to whatever we have discussed already. I hope you all are there still. Just give me 10 or 15 more minutes, we'll be done with this chapter also. In fact, this entire unit 1 of your CMA final SFM done. So question number 7, let's discuss question number. ABC Limited is contemplating have an access to a machine for a period of 5 years. Company have the use of the machine for a stipulated period through leasing arrangement. For the requisite amount can be borrowed to buy the machine. In case the leasing company received a proposal to pay annual end of the year 2.4 lakhs. So lease rental is going to be 2.4 lakhs for 5 years. In case of purchase, 10 lakhs cost, 12% is the interest rate, 5 years, equal installment, each installment becoming due at the beginning of each year. Installment is due at the beginning of each year. That means 0, 1, 2, 3, 4. 0, 1, 2, 3, 4. It's not 1, 2, 3, 4, 5. Please remember that. And for 0 year, present value is 1. It's not 0.909 or anything else. It is estimated that the machine can be sold for 2 lakhs salvage value. Company uses straight line method. So we are not bothered about tax savings or tax loss on capital gain or capital loss. Corporate tax rate is 30%. Post tax cost of capital is 10%. They have given KO. This is your discounting factor. This is your interest percentage. Both are different. Both are used differently, right? Whether the machine should be bought or taken on lease. So the first part is nothing but the same thing which you have already learned in all the other questions. Leasing or buying, borrow and buy. So that is it. Second question is different. Analyze the financial viability from the viewpoint of lessor. You have to analyze from viewpoint of lessor, assuming 12% post-tax cost of capital. So lessor wants 12% return. Lessor wants 12% return. This is your discounting factor. So they have given you 10% PV factor, 12% PV factor for all the 5 years. You have to use this only. It's an examination question, past examination question. Okay, so first part is same as what we have already done here. Lease payment 2,40,000, tax saving, post tax lease payable 1,68,000 into 3.79, 12% you have to use, okay, not 10%. One second, let me just check. Should I have used? I think I have made a mistake here. I have made a mistake here. This should have been 10%. 10% for 5 years, is it 3.79? I made a mistake there because 12% is only interest rate, not discounting factor. So 0.909 plus 0.826 plus 0.751 plus 0.683 plus 0.621, 3.79. So the only thing is I have typed it wrong over there. Okay, I have typed it wrong over here. It is 10% only. It is 10% only. Done. Same way, do it for this also. Calculate interest, your installment. Installment is very different here because here PVAF of 12% for 4 years plus 1. Don't forget this plus 1 because installment is at the beginning of each year, not at the end of each year. 10 lakhs, okay. So 2,47,000, 647 is your installment. You will have tax savings on interest also, right? So compute interest, compute. See, in this question, one thing unique which I have done is presented everything in one table. How, sir? Year 0, 1, 2, 3, 4, 5. Whenever there is installment beginning of the year, year 0. Do not forget this. Yeah, very important. If you are forgetting this, you are gone. You will be stuck up over there. And that is the moment when you will be scared of the exam itself. If you are not able to understand all this. Today itself we are going to pay how much? 2,47,000 installment, right? That entire 2,47,000 is principal only. I borrowed today, I paid now itself. Will there be any interest? No. So principal interest is 0 here. Same way, loan outstanding at the end of 5th year. The beginning of 5th year it will be 0 already. But you will have depreciation even at the end of 5th year because depreciation is year 1, 2, 3, 4, 5. Add this column, that is add interest column plus depreciation column to get total interest plus depreciation. On this only we are going to have tax shield. On interest plus depreciation only we are going to have tax shield. And installment minus tax savings also I have done it here itself. So everything in one table can also be solved. The only thing is you will have to manage the space properly, you will have to present it properly. I don't think in the portrait mode it will be possible. You will have to take landscape in examination. Okay. So this is your outflow. Now everything is very simple. Yeah. Also don't forget to have scrap value at the end of 5th year was how much? Scrap value, I think there was some scrap value, right? 48,000 is what? Is it? Or scrap value 48,000? Okay, all this I've already worked out. I could have ignored this working here. Okay. Now the only thing is I want to know what was the scrap value. Scrap value, how much they have given? They have given a scrap value of 2 lakhs. 2 lakhs is the scrap value at the end of 5th year, right? So don't forget that also. At the end of 5th year, what is happening? I'll just take that part again. 48,000 is a tax shield, okay? 48,000 is the tax savings on depreciation. There is no installment here. Only on depreciation we are having tax saving of how much? 48,000. This is an inflow. Plus salvage value of 2 lakhs. So 2 lakhs plus 48,000. 2,40,000 is the inflow here. 2,40,000 is the inflow. Bring it to the present value. Net NPV is minus 6,67,000. Which is better? Yeah. So lease option 6,36,000. This one is 6,67,000. Lease option is better as per lessee's point of view. As per lessee's. Now let's discuss second part. From lessor point of view, he wants to get how much percentage of post-tax cost of capital? 12%. So 12% is your discounting rate. Very important. 10 lakhs initial cost. Year 1 to 5, year 1 to 5, 5 years. Sir, what is this year 1 to 5? Every year he is able to receive how much of lease? 2,40,000. But if he is getting 2,40,000 as lease, you will have to pay 30% as tax also, right? So 1,68,000 is this net inflow. 1,68,000 is this net inflow. Discounted with 12% for 5 years, 3.60, 3.60. Sir, what is this? This is depreciation tax savings. That is also an inflow. See, I'll take you to again to the nano book. All these I've done here. All these I've written it here. Present value of CFAT from leasing proposal. CFAT will again add back depreciation, right? It will always add back depreciation, right? So either you use this format, this is also going to give you the same answer, or you can also try to use this format. Both are going to give you the same answer. If you want, you can test it. If you want, you can test it. 2 lakhs scrap value, that is also an inflow, right? So all these outflow is 10 lakhs, that is your initial machine cost. Negative NPV, yeah, that is lessor, when he tried to solve, he found out that he is not able to get 12% return if he is going to charge a rent of 2,40,000. If he is going to charge a rent of 2,40,000, he is unable to get 12% return. He is getting lesser than 12%. It's not that he is making loss. He is making a return of less than 12% and not 12%. Sir, what should he do to get a return of 12%? Increase the lease rental. Increase the lease rental to such that if you discount it with 12%, the NPV is 0. If the NPV is 0, that means he is achieving 12% of return, internal rate of return. How to compute IRR? That also we have discussed. We have discussed IRR for lessor point of view. Just go through my nano book. Done. I hope question number 7 is also done. Last two questions, question 8 and 9. Let's quickly complete them also. I think 8 is a bigger question, bigger in size. I'll try to complete 9 first, then we'll go to 8. Question number 9, let me complete that first, then we'll go to question number 8. So the question is big, but the solution is simple only, don't worry. X Limited has only one water pollution control machine in this type of block of asset with no book value under the provisions of Income Tax Act. I hope you all know what is block of asset under Income Tax Act, etc. as it was subject to rate of depreciation of 100% the very first year of installation. Due to fund crunch, X Limited decided to sell the machine, which can be sold in the market to anyone for 5 lakh rupees easily. Okay. Understanding this from a reliable source, Y Limited came forward to buy the machine for rupees 5 lakhs and lease it to X Limited again for a lease rental of 90,000. So what is happening? X Limited has one pollution control machine, water pollution control machine. It can sell it for 5 lakhs because right now it wants fund. Who wants funds? X Limited. There is one more company called Y Limited. It told that it will buy for 5 lakhs. After buying for 5 lakhs, it will again lease it to X Limited. I am X, you are Y. I want money. I am selling this machine for 5 lakhs. Again, I am getting it on lease from you for 90,000 per annum rent for 5 years. Able to get the point? X Limited decided to invest the net sale proceeds in a risk-free deposit. So net sale proceeds, it will invest in a risk-free deposit, fetching yearly interest of 8.75% to generate cash flow. It also decides to relook the entire issue afresh after the said 5 years. After 5 years, it will look afresh. Another company, Z Limited, also approached X Limited, proposing to sell a similar machine for rupees 4 lakhs. To the latter, there is one more company, Z Limited. Similar machine, it will sell it to us for 4 lakhs and undertook to buy it back at the end of 5 years for 1 lakh. So today I can buy for 4 lakhs and after 5 years I can sell it back to Z Limited for 1 lakh rupees. Provided the maintenance were entrusted to Z Limited for yearly charge of rupees 15,000. So maintenance were entrusted to Z Limited. Z Limited will take care of maintenance. X Limited would utilize the net sale proceeds of the old machine to fund this machine. Also should accept this offer. How will X Limited get this 4 lakh rupees? It is selling the old machine for 5 lakh. Out of that 5 lakh, it will spend 4 lakhs to buy the machine from Z. Marginal rate of tax of X Limited is 34%. Weighted average cost of capital is 12%. So this weighted average is nothing but discounting factor. This is the tax percentage. 12% is the discounting factor. They have given you PVF, IF for 12%. This was the question. Easy question only. Let's discuss the solution. Once the solution is done, you will be feeling more comfortable. Let me know if everything is going fine. Are you there? Let me know. Solution 9. Proposal of Y. Year 0, 1 to 5. 0, 1 to 5. What is it? Okay, one second. 5 lakhs you will receive. Out of this 5 lakhs, whatever we are receiving, book value is 0 rupees, right? Book value is 0. 5 lakh we receive. So this entire 5 lakh is capital gain. On this capital gain, we will have to pay tax expense. We will have to pay tax expense. So minus into 34, 3 lakh 30 is what we will receive in net. Into 1, 3 lakh 30 is the inflow for us today. Year 1 to 5, we will pay 90,000 of interest, but tax savings of 34%. So outflow will be only 59,400 into 3.605, 5 years, 12% PVAF, 2 lakh 14, right? At 0 year, what are we going to do? We are going to invest this in risk-free deposit also, right? So risk-free deposit, we are going to invest 3 lakh 30. Again, this is an outflow. So we received 3 lakh 30, right? And we again spent it on deposit. On this 3 lakh 30, I will get 8.75% as interest. Interest is an inflow. On this inflow, we'll have to pay tax also, right? So interest received will be only 19,057 net. Multiply with 3.605, 68,700 is your inflow. So very complicated, right? Because you have to understand this is outflow. Sorry, this is the inflow. 3 lakh 30 is inflow. This will be outflow in present value terms. Lease rental 90,000 for 5 years. Present value is 2 lakh 14, 137 outflow. This is outflow again. This is inflow. And at the end of 5th year, we are going to receive the 3 lakh 30 also, right? Hey, it's a fixed deposit. We will again receive the 3 lakh 30,000 from the bank along with interest. Interest was 90,057. I brought it to the present value. So this 3 lakh 30, if I am going to receive after 5 years, multiplied with 5th year PVIF. So 1,87,110 rupees will be our present value of inflow of this 3,30,000 which we are going to receive after 5 years. You have to bring everything to the present value. Yeah, please be sure everything has to be brought to the present value. Now add all these to get 41,676 as NPV, positive NPV of how much? 41,676. Great. Proposal Z. Proposal Z. Thank you for replying. CFAT is 3,30,000. 1 year 3,30,000. Sir, how 3,30,000? We have received 3,30,000 only, right? Here itself we have computed. Yeah, already we have computed 3,30,000. Buying will be 4 lakhs. So this is an outflow. 3,35,000 inflow, 4 lakhs is outflow. On this 4 lakh, we will receive tax savings on depreciation year 1 itself, because in the question they have specified that we will get tax savings on depreciation in the first year itself, 100% tax saving. So first year itself we will have to multiply it with the first year PVIF 0.893. So this will be what? This will be our tax savings on depreciation. Inflow, this is an inflow, this is an outflow, this is an inflow. Apart from that, 15,000 we have to bear maintenance expense, right? Here in this proposal, why was bearing maintenance expense? Because lessor is bearing maintenance expense, not lessee. But here we are becoming the owner, right? We are buying it for 4 lakhs. So don't forget to include maintenance expense cost. This is an outflow, but tax savings is there. So minus 34%. This will be our net outflow after tax maintenance expense into. So this will be our net outflow. And after 5 years, we will receive 1 lakh. On this 1 lakh, 34% will be tax expense, because 1 lakh entirely is our capital gain. WDV, book value is 0, sold it for 1 lakh. 1 lakh is entirely our capital gain. So 37,422, 53,182 say NPV. Go for proposal Z, which is giving you higher inflow. Very good question. I hope you were able to understand it clearly. You have to reduce tax savings. You have to reduce. See, wherever it is outflow, please don't forget to put it in negative. Wherever it is inflow, put it in positive. That is the crux of this particular. Leasing, borrowing and buying. SR's point of view. Okay, even question number 8 is a homework for you. You can try to solve it. The same question. Yeah, I've discussed everything already. Everything has been discussed. So nothing to worry here. Done. So leasing chapter as such, are you finding it simple, easy? All the conceptual understanding of nano book, is it okay? All the questions, is it okay? If you just reply me for the one last time, I will conclude this session. So lease, I've taken all these sums. Only one sum I've given you as homework. Go through that sum and your study mat questions also. So don't forget to go through study mat questions, right? That was your leasing chapter. Only one chart. We have completed almost all the concepts. I have not left any concept unleft or unsolved. All the concepts you have discussed. So of late, it's taking me only less amount of time. I earlier thought that probably leasing will take me 3 to 4 hours. Risk proposal will take me 3 hours. But put together both the chapters, you were able to complete it in 4 hours. Both the chapter, that is risk analysis and leasing, both we have tried to complete in 4 hours. Thank you so much for replying. Fifth sum. Okay. You want me to explain fifth sum? Regarding which concept was it? Okay. Question number 5. Let me first erase all this, yeah. Right. So fifth sum alone I will take it because there is a doubt asked for fifth question. If you understood fifth question, you can stop watching the lecture. If you have not understood, just watch the lecture now. Part A, I'm not explaining because it's very simple. It's an operating lease. You will understand only if you're knowing ES 19. Part B, tax benefit of depreciation on depreciation for 4 lakhs. Okay. So I think it's only like part C where you might find it difficult, right? Part C and part D probably. Okay, don't worry, I'll explain you. Okay. So 50 lakhs is the machine, 5 years they are going to lease. Who is going to lease? A company to X company. After 5 years, X can buy it for 1000 rupees. SLM based on depreciation, 20% on cost, tax rate 40%. If 12% is the required rate of return, how much lease rent lessor can charge? 12% is the required rate of return for whom? Lessor. How much would be the lease rent lessor should charge if he wants 12%? So can I tell? One second. Let me go to the solution. Can I tell? We need to find out lease rental. We need to find out what lease rental. 12% is the required rate of return for lessor. Now only think from the lessor's point of view. Don't think from the lessee's point of view. Lessor should get such amount so that after tax he is able to get 12% return. 12% is always after tax. Discounting factor should always be after tax. So 0.6x. Why 0.6x? Let us say if I am receiving 1 rupee from you, you are lessee, I am lessor. I am receiving 1 rupee from you. Out of this 1 rupee, I will pay tax of 0.40. In hand, I will be having only 0.6, right? In hand, I will be having only 0.6x. So my inflow is how much? Not 1x. It's only 0.6x. 0.6 of the rent. Lease rental is my inflow. Plus, there is an inflow in the form of tax savings on depreciation. Sir, how? I am a lessor. I bought the asset. This asset is there in the debit side. Asset side. Every year I am debiting depreciation. On the depreciation, I am having an inflow of tax savings. Tax savings on depreciation. That is an inflow, right? So this is also an inflow. This is also an inflow. Both these should be such that if you discount it at 12%, it should equal how much? Your initial cost of 50 lakhs. So your IRR, they have told that your IRR should be 12%. Yeah, your IRR should be 12%. As simple as that. Sir, if IRR should be 12%, go to Nano book now, everything will be clear. If IRR should be 12%, that is present value of CF80 add terminal value should be equal to cost of asset. Can I tell? This is nothing but my present value of cash flow after tax. Present value of CF80 only, right? This should be equal to what? Cost of asset. So that now 16,47,000 is coming. If you receive 16,47,407 from the lessee, you are lessee, right? I am receiving how much from you? 16,47,047. After receiving 16,47,000, I will have to pay 0.4 as tax. That means in hand I will receive only 0.6 of 16,47,407 into 0.6. If you do now, the answer comes to 9,88,444. This is what I am receiving in hand after paying tax. But apart from this, there is tax savings in the form of depreciation. That is also an inflow. How much is the inflow? 4 lakhs. So total inflow will be how much? 9,88,444 plus 4 lakhs equals to 13,88,442 will be our inflow. Hey, this now I'm only checking. I'm only checking if this 13,88,442, if I'm going to receive for 5 years, is it equal to 50 lakhs? The same I am going to receive from year 1 to 5. Year 1 to 5. So can I tell this is annuity? Annuity means I can multiply with PVAF 12% for 5 years, that is 3.604. So 13,88,442 multiplied by 3.604 into 3.6. Exactly, it is coming to 50,03,952. Sir, why sir 3,952 difference? Because you have taken only 3 decimals. Try to take 12 decimals, you will get exactly 50 lakhs. That means you are receiving 16 lakh 47, pay 40% tax, remaining amount plus tax savings on depreciation. If you receive over a period of 5 years, expected return is 12%, discounted over 12%. Present value of cash inflow is equals to present value of cash outflow. At what amount of lease rental? Sir, at 16 lakh 47, present value of cash inflow equals present value of cash outflow. If you discount by 12%, that means your internal rate of return is how much? 12%. You are able to earn exactly 12% if you receive 16 lakh 47 407 from the lessee. Exactly 12%. Okay. So I hope it was clear for you. Thank you for replying immediately. So we have done with leasing. Unit 1 is done. So for CMA syllabus right now, security analysis, which is a theory chapter, pending. You need to attend it along with the CA students. Okay. So you need to attend security analysis chapter along with CA students. Don't forget that. In fact, even IFM, International Financial Management, you will have to attend with CA, because that is also there in your syllabus, International Financial Management. I will announce it in the group. So 2 lectures, one is security analysis, International Financial Management, attend along with CA students. Done for CMA. If time permits, 2 more lectures I will try to take, for theory separately and for discussing past examination question paper. Right. So 2 sessions are for sure. 2 session depends on the time availability of mine. But I'll try my best to have 2 more sessions. 4 more sessions I'm planning, but not sure. 2 sessions are for sure. Done. Hope you were able to understand what I'm trying to explain. So thank you guys. That's it for this lecture. Take care. Bye bye.